Yo guys, update on the markets. This might be a bit premature, but fuck it, I can't really be asked. Might as well just record the video. But it looks like we might have put the bottom in. I'm gonna analyze the chart, show you guys what I'm thinking about on the US30, and hopefully we could get a huge rally to try and make up all this decline. Probably get back into the range as well. So what happened was the market was trading in a downtrend. We traded lower, had a market structure shift here, and then price targeted this fair value gap where institutional traders try to position short. When they positioned short, it forced the market structure shift lower, so price ended up coming down. And in the opportunity that was presented when price went lower, we tried to see whether or not price would give us an opportunity to get long before price shifted lower, but we didn't find that opportunity. That being said, we had some news today about potential trade deals with, I think it was Japan, and there's also some talks about the Secretary Treasury, something like that, talking about how it's not sustainable for them to keep in this trade war. So it seems like they're going to try and get some deals done to try and stop the trade war from causing a recession in the US. Nevertheless, what happened in the markets was price came down. We presented a market structure shift, but in the process of coming down, we was able to sweep quite a few levels of liquidity which we had on the chart. One of the main levels of liquidity that we had was this area right here. This area presented it was an Asian session low sweep. So we swept Asian session lows, and then price came into this area as well, which was the next level of liquidity that we was targeting. This was following the market structure shift. This decline here allowed us to sweep all levels of liquidity, and now we also managed to get above this Asian session high. So this was from today. If you was looking to get short into the market, this would have been the place to get short. Getting short here was presented right here, around 6 p.m. UK time. This was your opportunity to get short. And what happened when price went short? We had buyers rally the market back up into the fair value gap. So on the daily chart, this is going to look like this. It's going to look like a higher low presenting. So if prices begins to or continue to trade in this type of way, where we have a market structure shift here, shift to the upside, bounce off this fair value gap and come down, if this presents a lower high right at this level, which is looking very much likely now that we've had a massive rally today, if this presents a higher low, then we could see price gather some momentum to rally all the way back up into the range. Now, the reason why this is important is because, firstly, this is a massive engulfing candle. And what an engulfing candle is, it's just a candlestick that shows on higher time frames, indicating that institutions are beginning to get long. The reason we know this is because this candle, this green candle, it was larger than the body of this red candle. So this tells us that there's more buyers than there were sellers on this day. That being said, it's not guaranteed. We could also see, and if we take a look at the hourly chart, we can also see that in this zone here, inside the fair value gap, we haven't actually made another high. So this might be a premature call, because if price ends up not taking this high and we see liquidity build up tomorrow, and the liquidity in this level gets swept to the downside, and we get a close below Asian session lows, or from Monday I should say, then we'll see price continue to the downside. So we're not completely out of the woods yet. That being said, this is a good sign for the markets, and when we have price set up like this, we have an opportunity to get a massive rally higher. So this is a very important level in the market, and today is setting up as a very good opportunity to potentially begin to look for long positions into the market. I'll show you really quickly what I did on my demo account, because, or if you guys aren't aware, on my funded account, I have a payout which is going to be due on the 28th of April, which is next week Monday. So at the moment, I'm not trading the funded account anymore. I decided let me just trade the demo account, secure my profits, and stick to trading my demo account while I'm waiting. But yeah, if you take a look at what happened today, what we saw was, I'll show you my position. We saw price fall from the fair value gap, and we dropped about, I think it was about 300 points from the entry. After we declined, price ended up rallying back up, failing to make a lower low here and continue to take out these lows. So because we failed to take out these lows down here and then we engulfed to the upside, we could potentially see price start to rally higher. Any targets on price from here would always be to this fair value gap and to this level, to make sure that we can get a market structure shift here. So although price is showing that we've had a rally today and an engulfing candle, we still need a confirmation at this level here that we've got a market structure shift and price is rallying to try and get us back into an uptrend in regards to institutional order flow. The moment we have change of character will be confirmed, and price will most likely target further liquidity levels that we've got here. I'm just going to take off these moving averages, as well as the liquidity that's also resting at the highs, which is right here. So we could see price begin to start rallying again. It's very important that you don't try and rush these sort of positions and sort of rush these trades, because the market could be very choppy in playing out. So what I tend to do, what I really like to do, I should say, is I want to see the market structure shift first before I get into this trade, or I want to see us get above this fair value gap and hold it, and then I'll start considering looking for trades by a sweep of Asian session lows, because Asian session lows is how we position on an intraday basis. That's why today, when price came back up to sweep, this would have been the optimal place to enter, because it would have been a sweep of Asian session highs when we're trading in a downtrend. But now we've got an indication that we could possibly be rallying higher. This indication and a confirmation of above this fair value gap would tell us that we could potentially rally higher. So it's once we get above this fair value gap that I will begin looking to try and position for longs. But at this current moment in time, you want to be very, very patient. But yeah, so we was trying to target the lows. We presented a higher low right here, which is nice. And now hopefully we could target these highs, break these highs, and hopefully go up back into the range. If you're not aware, since January 1st, down 8%. If you're unaware, when you trade indices like US30, it's extremely rare for the market to be down on the year. So hopefully, if we get some resolutions with the tariffs, the market should rally back into positivity at bare minimum. And then from there, we'd have to see what happens with the markets. But I think institutional investors, everyone's very cautious about positioning into these markets. But if we get something that gives us an indication that price to go higher, we could see a huge rally upwards. I'm not going to tell you guys to have FOMO. But when the market's down, you want to try and buy the market back up. These are the best trades you can take. Because if we take a look at the long-term view of the market tends to rally higher. Even when we had a massive crash here in 2020, the best thing you could have done would have been trying to position back in for longs in the market. So this is why it's very important to take advantage of market dips. But obviously try and avoid being caught out as liquidity. This is why it's important that you also position well. You allow the trade to play out, and this is why I use large stop losses. And I always recommend people use wide stop losses because you don't want to be stopped out of a trade when you're right in your technical analysis. It's very, very important. That's why you need to have wide stop losses to make sure that your trades have the room to fluctuate. I'll give you an example. So today, if we take a look at what happened today, price came to this area and we sold it back down. When we sold the market down, I could have moved my stop loss to break even. And if I was trading a funded account, if I was trading live money, I would have moved my stop loss to break even because I would have already been cautious about price setting up a higher low, if you get where I'm coming from. So when you give the market space to move and fluctuate, when your entries are good, you should be able to, manage your risk effectively. And these type of trades are the type of trades you're going to move your stop loss to break even. It's very, very rare that you get trades like this. But the main reason is, obviously, we're trading in a downtrend. That's the main reason you would want to move your stop loss to break even. Because if we're trading in a downtrend and price begins to target or continue to go up, then it's an indication that maybe we're no longer in a downtrend and we're potentially presenting a higher low. But yeah, we was able to sweep this level of liquidity down here. And then we had a massive rally after that. So it was nice to see, and obviously, hopefully, this could be the beginning of a really nice upward move. But we still have to be cautious.
I want to really quickly touch upon the bear case scenario of what could happen if the market fails tomorrow, because this is also a possibility. So if the market fails tomorrow, what's that going to look like? Firstly, on the daily chart, we had a massive rally today. We came into this fair value gap, we swept Asian session liquidities to the upside, and then we're able to hold above Asian session liquidity. But as you can see, we're weakening. The moment we swept Asian session liquidity at the highs, we're beginning to weaken. So there is still a possibility that we just get a massive decline tomorrow. And the way that's going to look like, the way that will play out is we get sellers immediately, from the moment the market opens and the futures open, we get sellers immediately push price below Asian session lows. If we get a close on the hourly chart below this level tomorrow, then we will know for sure, well not for sure, but there's going to be a high likelihood that price actually declines. And if price declines tomorrow below this Asian session liquidity, then we could potentially see price decline so aggressively that we actually engulf this candle to the downside and cancel out this massive green day that we've had today.
So on the reverse side, there is still a possibility that price goes down. The markets, you have to be very, very cautious about how you trade the markets, because these type of rallies tend to induce people to think that it's time to get long. It even done that for me. The best thing about it is, in my position, I know how to obviously manage my risk effectively, and I give my trades opportunities for the market to play out. I don't ever get aggressive into trades. I'm always very patient and make sure what I'm looking for and how I'm analysing the charts plays out with what I'm looking for. But that being said, if we do get a massive decline at the open, we'll see price come below here and then we'll see price start to trade down. The moment we get below this level on the hourly chart, this will confirm as a double top. We would have closed below Asian sessions lows, and then we'd be targeting the lows again. A part of me believes that there's another way for the market to target these lows, but then to continue higher after. This is how the market gets, everyone gets maximum loss for everybody who tries to participate, both in the up direction and the down direction. If we have a massive decline tomorrow, then price could literally just trade in a range. If price begins trading in a range slightly above this level of liquidity, let's say we build a range right here. If we trade in a range right here, and price fails to target this level of liquidity, so we just continue to bounce up and down within this level, this would tell me that we're actually building up liquidity at these lows. So there would still be a potential chance that what price will do is we'll trade in a range like this, and this is the bear case, but this is the bear case from the current level that we're at. We'll trade in a range like this up until we sweep to the high, get people into the market. It won't close above here. We'll end up coming all the way back down, sweeping liquidity, and the buyers would have been taken out because they would have been swept out here. the sellers would have been taken out because they would have been swept out up here, and then price would rally higher. These type of scenarios do occur. A situation like this occurred right here in January. This was the first trade I took of the year. We had this level of liquidity here. We had price fluctuating around the level of liquidity in an attempt to build up more liquidity in this area before sweeping liquidity to the downside and then rallying higher. And if you take a look, we swept to the upside, we swept to the downside, and then we rallied higher. This is what the markets do. Institutions do this as well. It's basically them getting the maximum number of people out of the markets. The sellers get swept out because the sellers get taken out up here. The buyers get swept out because the buyers get taken out down here. And then we have our massive move higher. So that is another potential scenario, and I just wanted to talk about this because this is really important as well. This is why I'm not looking to get into any longs aggressively. I want to see price get above this level and hold it and trade above it. Once I have an indication that price could potentially get above this level and hold it and stay above here, then I'll be confident that price is going higher. But unless from this current position, if we don't get above here, then I won't see much momentum for price to try and target these highs. In the same way, if we come all the way back down into this range, I want to see whether or not we go straight and target these lows. Because if we don't, if we trade in this range sideways, it's indicating a build-up of liquidity as we saw right here. And the moment these type of situations happen, we get the best trading opportunities to get a market rally. And to be fair, I'll prefer for this to occur because firstly, I'm not getting a payout till next week. So I'm not going to start trading the account again till next week. And I'll be honest, if this type of move occurs, I'm going to position down here and I'm just going to hold it for probably a few thousand pips, maybe about 3,000 or 4,000 pips. So this is how the market tends to, manipulate price action. People get caught out on both sides. Day traders don't have a clue what's going on. Do you know what I'm saying? But these type of scenarios are the best trading opportunities. When you get a build up of liquidity, a level of liquidity, it just tells you that there's more liquidity being built up. This is what we then call a liquidity pool. We have a pool of liquidity that just built up. The liquidity that started from here, as well as this liquidity down here, we have an inducement and then price rallies higher. And an inducement just means we sweep the liquidity. And then once we sweep the liquidity, price rallies higher, we go higher and we usually have a massive move. Nevertheless, I'm going to leave the video there. I hope you found value in the content. I'm going to recommend you guys to take a look at my video, Learn How to Trade US30 in 5 minutes. If you watch that video, you'll have a very solid understanding of how I trade because it's a very, very simple video. And if you want further guidance, you can also reach out to me privately. I have a video recorded course content that's for a reasonable price. You can learn how I trade in much more depth. Nevertheless, I hope you enjoyed the video. Catch you in the next one. It's Take Note.